Hello everyone and welcome to a new ATFX video. My name is Gonzalo Cañete and this is the recap of the week. We're gonna take a look of all the major events happened during the last week. You're probably watching this video by the beginning of the week, so by then your day is Monday 25th of March. I'm recording this by the end of Friday, last session of the week. Reviewing the market, I'm gonna take a look on the equity market in US. We're gonna take a look of what is going on in Wall Street, but I also want to recap absolutely everything happens during the week, so you can start the week with a clear vision of what was the last most important events. In that, it's actually a very interesting week because we have been analyzing. And one more time, I just publish every morning the reports here, so you can follow all the week by the daily reports with absolutely all equity, fixed income, commodity, currencies, and also macroeconomical and data and geopolitical analysis. So you can follow and track absolutely everything from here. Now let's go to the business, let's go to the market. I have been taking few notes just to recap everything and do not forget anything. On Monday, I was just mentioned that based on the last reports published by Blackrock, which is one of the notes I was sharing with you on Monday. It's 18 off here, this one, the last report published on Monday. I was just recap with you the comments from Blackrock, which they expecting by 2025, by next year, an increase on inflation. And this is important because mainly what we have seen so far is a market that is extremely bullish, is rising based on only one single thought, which is the interest rate cut by the Federal Reserve. And the Federal Reserve is cutting interest rate because they say that inflation is not anymore a problem, even when the economic growth rate is good in the United States and unemployment rate is below 4%. So far, it doesn't seem that the US economy need urgently interest rate cuts. The economy is going well. And if it's going well, there is no need for financial support from that perspective or monetary perspective. So the main question is why the Federal Reserve is pushing the idea of cut interest rates. We don't know, but it's important to analyze this factor because if by any chance they are wrong, and they are not actually cutting the interest rate this year, which is something that possibly could be happening right now. Don't forget that in December, when Jerome Powell was mentioned this option, the interest rate cuts, as an option on the table of the Federal Reserve, by then in December, the main question was like, okay, when exactly this is going to happen? And they say market was discounted that mainly the experts were deciding that by March, it will be the first round of interest rate cuts. It didn't happen. It never happened. Actually, by February, we saw how the market was discounted the end of the illusion of that interest rate cuts. Let's analyze one more time the evolution of the 2-year bond in United States. Two main drops. This one, it was caused by the negative results of the labor market. The second one was caused by the words by Jerome Powell during his speech on December, promising interest rate cuts in 2024. And as soon as 2024 started, we have seen how the market was getting flat in this 2-year bond, which is discounted. Just keep in mind the correlation between interest rates and yields on the bonds. If the interest rates are rising, the yields are rising. If the interest rates are dropping, the yields are dropping. Therefore, the yield of the bond are reflecting in real time what is the perception and the feeling of the market regarding the interest rate cuts. So if this market is rising, it means the interest rate cuts moving farther. They are not getting close at all. So that's why during the beginning of the 2024, when the market saw that actually the interest rate cut was not happening in March, the yield started to rise back again. Then we got a negative report in terms of labor. Unemployment rate was rising to 3.9%, still below 4%. But the main effect, it was so if the unemployment rate is rising, finally, it means that inflation is not a problem anymore. Because as we repeat in these reports many times, the main issue for the Federal Reserve with inflation is the low unemployment rate, salary expectations are making the potential inflation be persistent, which is mainly the macroeconomical relation called by Phillips curve, which relate the asymmetrical relation or negative correlation between unemployment rate and inflation rate. Take a look, Google that if you want to learn something from economy. in any case. But this relation just promises us that if the employment rate is rising, inflation is not a problem. That's why the confidence of the market was dropping, the yields were dropping when the unemployment rate was rising. But it was back again up when the inflation rate was actually higher than expected 2 weeks ago. And these last few candles is mainly the drop on the yield by the Jerome Powell speech during Wednesday night. 1, 2, and 3 seasons in negative, caused by, again, the insistence that Jerome Powell was mentioning once again, we are serious, the interest rate cut is going to happen. Still, they didn't say when, but they promised that they will happen. More things that have been moving the market. Oh, by the way, this effect was causing on the dollar index a drop initially, which it was from Wednesday. It was dropping the market, but immediately after, the dollar index is rising back again. If they say they're gonna cut interest rates, the natural reaction of the dollar is getting cheaper, weaker, lost value compared with the rest of the currencies. But as soon as that special effect happened, we have seen how the dollar was recovering actually the main power, and actually euro dollar was doing exactly the same. It was rising because of Jerome Powell words here, but the last 2 seasons is dropping back again. So and if you take a look on long term, you will see why we believe that this is the natural reaction of euro dollar. Keep dropping in this super long term chart. As you can see, this is coming for more than 15 years, and probably the natural reaction now is drop even below 1 on euro dollar, even below 0.95, which is a new record low in euro dollar relation. And I believe this is going to happen not only because the charts are pointing in that direction, not only because Jerome Powell cannot specify exactly when they're going to cut interest rate, but also because from a fundamental perspective, from a macroeconomical perspective, US economy is working well. The growth rate is strong, while the growth rate in Europe is not working at all. So unemployment rate is still below 4% in US, but it's above 6% in Europe. Europe is not growing. The PMI index published this morning, Friday, it was actually super positive, still showing expansion, economical expansion in US, but it was extremely bad particularly in the case of Germany. Manufacturing PMI in Germany, it was 41.2, 41.3, I don't remember exactly the number, but it was really bad. It clearly gives us a picture that the German economy is not moving at all in the right direction. 41.6%. So clearly Europe got a problem. If Europe got a problem, obviously the flow of money gonna move from euro assets to US assets, and that is a bearish euro dollar correlation. So that's why we believe that from a fundamental perspective, this pair gonna drop in the coming months. What else? Another important event happened during the week. It was the Bank of Japan. They announced actually an increase on the interest rates, but still the reaction of the market was actually the opposite. I was mentioned this in the morning report, and I was actually giving to you a few examples on dollar yen and also on the Japanese bonds to show you that in fact, regardless what's the announcements done by the Bank of Japan, even if they announced that they're going to increase interest rates, the market reaction was actually the opposite. The market was reacting like they actually are not increasing interest rate, even they are decreasing the interest rate. How is possible that? Well, it's possible because I believe there were certain comments attached to the announcement that didn't convince the market. One of the main comments, I believe, is the key factor for this reaction on the yen, which it was getting weaker instead of stronger after this announcement. It was the words by Ueda, the head of the Bank of Japan, who was saying like, regardless if they increase interest rate, they're gonna keep buying exactly the same amount of public government bonds, which means like if the main problem of Japanese economy is like it's feed itself, all financial assets are feeding itself by the Bank of Japan, so it's a kind of monopoly game that they are printing out money constantly to feed up the financial assets and avoid any normalization or correction on the market. In this case, they say, well, we're gonna increase interest rates. However, we're gonna keep buying the bonds, which means we're gonna keep printing the money. Therefore, there is no effects from a monetary policy perspective. And that's why I believe if you take a look on dollar yen, you will actually see that the reaction, it was the opposite. You see, it's rising, it's not dropping, but it's rising. The dollar yen, which means the yen is getting weaker against the dollar since the Japanese central bank spoke this week on Tuesday or Wednesday, I don't remember. So since then, we have seen that it's actually moving forward. And this is the area that I believe could be a target, because this is the maximums, the tops, the heights achieved on April 1990. So since then, 1990 or 1991, I don't remember. Since then, this is the maximum exchange rate registry on dollar yen in the last 20-30 years. And therefore, I believe that if that levels are back again on the screens, it's probably an area for massive sell out. So yeah, keep an eye on this chart because it could be very interesting. We also got another event, which is the Bank of England. They announced they didn't move the interest rate, they didn't increase the interest rate, but the interesting thing at this point is the Bank of England was the president of Bank of England, governor of Bank of England, which is Bailey. He was saying that the things are getting ready to cut the interest rates. So again, Bank of England gonna follow actually the Federal Reserve policy, and they're gonna cut interest rates as well. The thing is, the difference mainly here is, if US doesn't really need an interest rate cut because the growth rate is good, the unemployment rate is low, in the case of UK, it's not exactly the same. UK, it got certain similarities with the US economy and certain similarities with the German economy. Which ones? Mainly, the growth rate is like Germany. It's actually more or less escaping from a recession right now, the UK economy. But on the other hand, the employment rate is still below 4%, so it's similar to US. So therefore, if the unemployment rate is below 4%, it means that still there are potential for new increase on inflation. They know that. But still, if the growth rate of the economy is too low, and you can take a look of the growth rate of United Kingdom economy right here, which is very similar to the profile of Germany. As you can see, it's almost flat. For the last year, 2023 was a disaster. So as you can see, it's completely flat, the growth rate in England. Therefore, maybe they need that interest rate cuts. They need certain stimulus. They need reduce the cost, the financial cost on loans. And that's why they probably want to apply that interest rate cuts. However, the inflation rate is not changing in the way they say. They say it's certain improvements. It's not true. Because if you take a look, I will not call this an improvement if you consider that actually we are almost at the same level that in November. So yeah, the inflation is getting reduced, but it's not getting reduced extremely fast. And actually, between the previous months, the previous period, we can see that has been dropping, but rising eventually at some point. So that's why they probably need to be so cautious in these decisions to apply the interest rate cuts. Obviously, the relation pound-dollar, which is the cable, has been dropping because we got, first of all, the promises from Bailey that they're going to cut interest rate in England. And secondly, we got a dollar that we have analyzed a few minutes ago that is rising. Regardless what Powell is saying, the dollar is pushing forward. Why? Because US economy is working well. It's the only one that is moving forward, while European economy is getting completely frozen. And Chinese economy is completely different because difficult to invest and get out or get in from that investment. I think this is all. I think this is all. We talk about Bank of Japan, we talk about Bank of England, we also mentioned the Blackrock expectations from inflation. We have been also mentioned the Japanese situation. Oil was rising during the week. Now it's getting more or less flat, but it was rising during the week, mainly probably caused by the attacks on oil refineries from Russia, done by Ukrainian missiles and drones during the weekend. There is certain numbers also by India. They increased the derivatives on oil, but they decreased importation of oil last year. And also China, apparently, so far, the numbers they say that the last 2 months, the beginning of 2024, they are increasing the demand of oil, which is a good signal because it clearly shows us that the economy in China is going well. New highs, new tops on on gold, $222 per ounce. $2,222 per ounce. It was registry, which is in line with the weaknesses of the dollar during the Powell speech. But by now, gold is getting lower. Right now, it's at $2,159 per ounce, and it's probably the natural reaction after the reborn of the price on the dollar index rising back again. You see, it's rising and rising still. I think that's all. I hope this full 360 degrees view on the market for this week is useful for you for the starting of your week. And yeah, good luck, and follow us if you like this kind of reports. Please contact me. You can subscribe to the channel, you can give me a thumb up, please do it. And also, you got my contact. Where is my contact? Let me check. You got my contact over here. That's my email. If you want to contact me to request any particular asset you would like to analyze, or you want to join me in a podcast, seasons, and so on, please contact me through the email that you got there, gonzalo.canete@atfx.com, and I will be more than happy to welcome you or prepare any specific contents from your ideas. I wait for your comments on the bottom of the video, and take care. See you in the next ones. Bye bye.